right? I know there are questions now, but before we go into questions, I would want to show an example of a financial model that was built for a school for strategic budgeting and planning purpose, right? So I'll show that quickly, and then this is a sample of a financial model, right? So this is a cover page for the financial model. You can see the product, the financial model. You can see the company that it was built for, the objective, and all that. Right? This was built for a school, right? And then from the cover page, once you scroll to the next sheet, you see a kind of button where you can click on to take you to the sheet. So the first is a dashboard, which is an output sheet. Then you have the input sheet where the assumptions are put into, and then you have the workings where you have the workings, the debt schedule, the fixed assets, and then you have the output, another kind of output, the income statement, balance sheet, cash flow, and then other analysis, right? So this is a flow of how this document goes. It goes from the dashboard to the input, also to the end, to the glossary of terms, right? So for example, if I wanted to go to the balance sheet quickly, I just need to click on this button and it takes me to the balance sheet, and I can see that easily, right? So I'll go back to the menu. So this is just a button. This is just a sheet where you can use to navigate around the document, and then showing the dashboard quickly. So this is a dashboard that just shows a key highlight into the most important metrics the CFO or the finance manager of the company wants to be able to track easily. So for example, you can see a currency. So let's say this is a pound currency. So the person might want to see the performance of the business in pounds. And once this is changed to naira, once this can be changed to naira, and then you see the average cost, you see the income, you see the salary, the tuition fee the school generates per pupil, the costs that they need to spend per pupil in terms of salary for staff and all that. You can see the total set of the company, the liability. And once it changes to pounds, you see that everything changes. And then other kinds of flexibilities where if you want to see a chart on operating income, you can see the chart. If you want to see a chart on net income, you can easily see the chart and then check out the trend and check out the information, and then based on that trend, make the right decision for your business, right? And then from this chart, you can see the school capacity. So let's say in 2022, they make an assumption that 10 more pupils enter. You can easily see the change in numbers on the dashboard. If they decide to reduce the tuition fee, you can see that change. Maybe they decided to reduce it by 5%. You can see the numbers here on the dashboard easily. If for example, the company decide to sell some of its school bus or some of its assets, right? You can see how that affects its assets here. And if the company decides to pay some of its debts off, you can see how that reduces its debts, amongst other insights you can see from the dashboard. And then the input shows you the assumptions that go into the model. So for example, you can see the currency button where you can change it. You can see macroeconomic assumptions like inflation, interest rates, exchange rates, tax rates. And then for the revenue, you can see different kind of assumptions on the expected opening capacity of each class, right? And when the classes would start. So when the session will start September, you can see the number of pupils they expect to take the entrance examination for each of the years. So how many people want to enter year 1, year 2, and then you can see the expected number of people to be in the class by the end of the session, and then you can see the expected number of pupils they expect to leave within the session. You can see the fees. So they expect some people to pay their school fees annually, just pay once in a session. Some people might want to pay per term. So they have a breakdown of how many people want to do that. They have the amount of tuition fees to be paid. And then easily, so they have other sources of incomes. Yeah, you can see that here. And then for insurance, pupils paying insurance, you can see the breakdown of insurance to be paid. You can see the rate of insurance to be paid, uniform sales. And for other operating expenses, so you can see the breakdown of the operating expenses, the assumptions of how much they plan to spend on all these costs. So you can see that all these costs are a lot. Right? So you can't just in your head start assuming that, okay, if this cost increase by 5%, what happens to revenue? A financial model helps you put all those things in an easy document and make it easy for you to change these metrics and see how it affects the overall things your company wants to measure. You can see the amount of personnel costs on salaries, administrative costs. You can see the capex, so they have land and building, motor vehicles, how much they plan to spend on them, furnitures, computer and IT equipment, and all that, right? So the working sheet is where all these calculations are done. So they calculate the number of people they expect in reception, year 1, year 2, and the likes. All those calculations are done on the working sheets. And then FA sheet is where the capital expenditures are calculated. The DS, for example, is where the debts are calculated. And then this is the income statement where you easily can see that the company expects to make £2 million in year 1, in the forecast year 1, £3 million in forecast year 2. They expect to spend 192. Well, they expect to get £192,000 in other income, spend about almost £2 million, and you can easily change this from the dashboard to Naira. Just change this to Naira easily, and then I can see that okay in Naira, so that's actually 1.6 billion. So the company is expected to make 1.6 billion in revenue, and then expected to spend 1.1 billion on operating expenses, make 603 million in EBITDA. And at the end of the year, the school is expected to make 691 million naira in net income, right? And then you can see the balance sheet showing the assets of the company, the current assets, the borrowings of the company, and then the equity, the retained earnings of the company. You can also see the cash flow statement showing the amount of cash the company would have at the end of the year. And then the interesting thing about this model is that I can actually decide to see these numbers on a semi-annually, for instance. So semi-annually, this tells me that in 6 months' time, I'll make 776 million, right? And then I can change it to monthly. This tells me that in month 1, I'll make 600 in month make 682 million based on my assumptions, and I'll make a loss in October. In October, my business I'll have 72 million in loss. But at the end of the month, I would still have by the end of the month, I'll have 971 million in cash flow. So I'll still have cash flow even though I made some losses. So this helps you understand the expected amount of cash your business will have at the end of a month, at the end of 2 months, at the end of 3 months, depending on what you want to see, or depending on what your client wants to see. And then the analysis is where key metrics or key things that you want to put on the analysis on the dashboard are analyzed. So for me, I can see total assets, the total liabilities. I can monitor the trends in revenue, trends in other income, EBITDA, the change in trend, and then I can see the margin analysis, amongst other kind of analysis that I want to do. All this can be done on the analysis sheet, right? So this is an example of a financial model built for financial planning, budgeting, and strategic purpose, right? A financial model might be built for other reasons too, right? And then might be built for other reasons. And depending on what the company, the client, or if you are the business owner, depending on what you want to achieve for your business, right? So having said this brings us to the end of this webinar.